Thank you for joining us at xm.com for the weekly outlook. I'm Christina Marujos, and joining me today is Senior Investment Analyst Rafi Boyajian. We'll be having a look at the week ahead. So let's start by having a look at the RBA. It's holding its policy meeting this week. After 2 rate cuts, the RBA kept rates steady in August. Now, with the Aussie taking such a hit from the trade wars, do you think we'll see the RBA signaling another rate cut?
Well, they will probably leave the door open for more cuts, but they are expected to stay on hold once more, because after those 2 cuts, they will want to wait and see how it starts to support the economy, and of course how the trade war pans out as well in the coming weeks. But they will also be paying attention to next week's data releases. We've got the GDP numbers for the second quarter coming up. If we were to see any unexpected weakness in those growth numbers, that could potentially signal that the next cut will likely be sooner rather than later.
And of course, speaking of rate cuts, let's have a look at Canada. The Bank of Canada is holding its policy meeting as well this week, and markets are convinced it will cut rates before the end of the year. Do you think we could see such a rate cut by the Bank of Canada this week, or maybe hints it's coming up?
Well, they're unlikely to cut just yet. We did get some hints at the last meeting that they were moving towards a more dovish stance. They paid more attention to the impact from the ongoing trade war rather than, and not so much, and less so on economic data. And so we could see an even bigger dovish tilt at the next meeting, but we do have federal elections coming up in Canada in October, so they will probably want to avoid making any rate cuts before those elections. So it's unlikely we're going to get a rate cut until the end of October policy meeting.
Now let's have a look at the UK. Of course, it's in turmoil with Prime Minister Johnson's decision to prorogue Parliament for a month. Now, Parliament is back in session this week on Tuesday. What can we expect out of it, and how will any outcome affect the pound?
Well, it's certainly going to be a very turbulent few weeks for the pound in the lead up to that October 31st deadline. So next week, Parliament MPs will be back from their summer recess. They will only have a very limited time, though, to get any legislation through, given that the decision by the Prime Minister to extend the number of weeks that Parliament will be suspended around the conference season. So next week, we're likely to see the opposition party, particularly the Labour Party, will probably call a vote of no confidence in the government. If he gets the support from Tory Remainers, he's likely to win such a motion. On the other hand, if he loses the vote, or he doesn't decide against calling a vote of no confidence, then MPs will try to pass legislation to block a no-deal Brexit. If they don't have enough time to do that, and all the indications are that a no-deal Brexit is unavoidable, that of course would lead the pound, we could see the pound sinking even further against the US dollar.
So it remains to be seen what's happening in the UK. Finally, let's have a look at the US. It's reporting the employment report, of course, this week. There's a general feeling, though, that the economy of the United States is slowing down. Do you think that could be reflected in this data?
Well, we have seen some moderation in jobs growth. Again, we're expecting a figure of around 155,000 for August. That's not quite as high as we've been used to in recent years. It's still a healthy reading, nevertheless, if it does come in as expected. Wage growth, although it's been hovering around 3%. It's not quite as high as you would have expected given the tight labor market. So the policymakers will be watching carefully what happens to wage growth in the coming months, because if wage growth holds around 3% or even heads higher, that would mean that that would bode well for future spending, which of course spending is the big part of the US economy. On the other hand, if we do see wage growth perhaps weakening, then that would heighten speculation about more aggressive easing by the Fed.
Rafi, thank you for joining me
Thank
today.
you.
And thank you for watching us at xm.com.